Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted today to be able to speak to Iain Staples of Schroders, one of the UK's finest investors. So welcome, Iain.
Good morning. Thank you for the invitation.
Yeah, well, given all the sort of turbulence in the markets on the back of sort of rising interest rates, high inflation, and the ongoing war in Ukraine and Russia, what's your sort of like broad outlook for equities going forward, particularly in your sort of sweet spot of UK small caps?
Well, I think someone who's a far better stock picker than me observed that interest rates are to equities what gravity is to apples. So I think it's very important to sort of always appreciate what your philosophy is and stick to it regardless when the market is going through, albeit an extended one, quite a lengthy phase transition from free money forever with low interest rates to actually money's going to start costing you something now. And also we've got inflation to deal with. So what sort of companies is it that you want to be invested in over the long term, i.e. 3 to 5 years, which is when equities, of course, come into their own. I think the cause of the inflation is, I mean, it's been debated many times in the press, of course, both in the educated press and sort of the vernacular. But sort of the proximate cause is, of course, the Ukrainian invasion. But there's something sort of far deeper going on. I think it's going to take a rather more extended period of heightened interest rates than people are prepared to appreciate. And that was during COVID. The Bank of England, along with other central banks, most notably the Federal Reserve and the ECB, broadened their quantitative easing, i.e. the posh word for money printing. And during COVID, GDP fell by a quarter of what it did in the great financial crash of 2008. But they printed 4 times as much money. So there's a 16 times burner was put on during COVID versus the great financial crash. And therefore, I think we're going to see goods inflation and service inflation quite independently of what the trust has done, or Trust and Comedy Cartang have done in the UK to try and bring down inflation. We're going to see persistent services inflation. And the reason I'm the reason I'm trying to sort of make this point is that it sort of goes to the heart of the investment philosophy I've been following for quite a long time now. It's actually trying to understand what companies around in the UK have something unique about them, either through innovation or through a set of relationships that generates sustainable quality for their customers. So they have true pricing power. Now, that is all too easy when inflation is 1 or 2%. It's quite easy for a salesman to go out for a cup of coffee, or the saleswoman to jet off to Milan and sort of have a nice meal with a customer and say, we're putting up prices by 4% this year. And sort of most people say, well, that's quite sensible. But when inflation is 9 or 10 and you sort of had the price of steel double and all sorts of commodities double, I know they've eased it off now as of early October, but it's really understanding in some detail what unique set of capabilities and properties a company has that will allow it to put through prices, and really the customer can't do all too much about it.
Well, let's just talk about that. Let's use one example, because I did see one of the IPOs that actually has been a success over the last couple of years. In fact, a roaring success. Big Technologies, which I think does sort of like prisoner electronic tagging, and they've got a good big position in terms of Australia and New Zealand, etc., with large sort of like addressable markets which are growing and high barriers to entry. And do you want to just talk through how that, your philosophy with pricing power and protecting margins? It seems to be working perfectly with that particular stock. Yes,
I mean, it's certainly you kindly gave me a very thorough list. And I just looking down that list, I think it is my absolute all-time big favourite, big pick.
Oh, is it?
Yeah.
Well, I didn't realise that. Okay.
Well done. No, well done. So I thought, oh, we'll have a good chat. No, this, as you say, it's been a successful IPO in absolutely terrible markets. And the founder and CEO came to us.
That's Sarah Murray, isn't it?
Sarah Murray, that's right. And she came to us and said, well, have you ever been in the supermarket when you've got your toddler child, you're putting the shopping in the trolley, 1 minute the toddler's there, the next minute toddler's gone. So you've got a frantic 5 minutes trying to find a lost toddler and probably a very upset toddler when you do find the blessed angel. And she said, well, okay, well, why can't I build a tracking system, not necessarily want to track my children, but sort of put a little tag on a toddler, so that if they do go walkabout in a supermarket, I'm not going to be worrying too much. But then, of course, she realised that that same technology, I think it went from an idea to save heartbreak at the supermarket to actually, well, how do I actually make money out of this? And it's to do with offenders. And then she realised that the technology existed in terms of GPS, and also, of course, the transponder unit to transmit that position of the GPS. But of course, you're dealing with people that, shall we say, are less than honest or have got an unfortunate track record. And of course, sort of other people have tried these tags. For, I think, a competing system is with G4S. And there is a publicly available video on YouTube that shows you how to take off the tag of G4S, I hasten to add. And then, of course, you leave it in your sitting room if you've been given a curfew as part of your condition of your release. And then you go off and do whatever it is you do, have 10 pints in the pub or go off and breaking and entering, I don't know.
Or even go on a holiday with a swimming pool in the background.
Yeah, or even go to a nice hotel with a very nice swimming pool. And so what she realised was that the technology, whilst not to be belittled, was relatively straightforward, but far more important was the anti-tamper conditions. So she and her team spent an awful lot of time developing a little bit of kit or a piece of kit that basically fits around your ankle, but also within the actual strap itself, there are electrical conductors. Don't hurt the person in any way, but if they are broken or stretched in any way apart from just sort of doing your sort of normal walking about, then they'll know it's being tampered with, and it's a phone call goes to the police. An automated phone call goes to the police. Also, they've developed a patent for detecting alcohol use. And now, of course, some of the people do have end up in prison, have a bad case of alcoholism, along with sort of whatever crime they committed. So very often the authorities are saying, well, we'll let you out halfway through your sentence, but you're not allowed to attack the source in any way. And of course, this typically has been very difficult to monitor because it's liquid.
Yeah.
But what they realised was that when you drink alcohol, and certainly if you drink it to excess, then you sweat in your effluvia. You sweat alcohol, and that can be detected. And what they figured out was I don't know if you remember the old breathalyzers from the Sweden. Yeah. They turned orange, the dichromate. Well, basically they use that in the tag. So the chemistry is straightforward, but it's a very clever engineering implementation to allow them to detect alcohol. And of course, because there's GPS, you could tell the offender, you can go within 5 miles of your house, but you're not allowed in a pub. Now that's, that's quite good because you know where they live. If you know their place, their address, where they say their place of abode, every pub within 5 miles, and it's a piece of software. So what they also do is sell the software to track said offender. So therefore, you've got all of a sudden just this person taken out of prison that saves the state an awful lot of money. You've got a set of services that keep that offender away from perhaps his assaulted a spouse or a girlfriend or something horrific like that. Perhaps he's too fond of the sauce and he does bad things when he's in his cups. All that can be cut out. And funnily enough, because the engineering is so good, I think it's assembled in Norwich, I think. You know, it's a wonderful piece of British engineering, software, hardware, can't be tampered with, can't be broken, and it just works. And the battery lasts, I think they've designed it so that the battery's recharged when he goes to see his probation officer. So he's sitting there with his probation officer for half an hour. Probation officer whips it off like the clothing tag that you get on expensive people, well, virtually everything, you know, bottles of scotch in the supermarket. It works like that. It charges for half an hour, then it goes back on, and it's all tickety boo. So they enjoy, you know, this R&D that they put in allows them to differentiate themselves from the competition. There's no YouTube video of being able to take off a big technologies tag, and it just works. And they can charge not quite what they like. We never alleged that of Sarah Murray, but they can charge a very competitive price to governments around the world.
Yeah, no, you see that reflected in the margins, because I think they do a sort of 50% operating profit margin. So that just says that they've got the economies of scale and they've got the USPs to be able to really continue to drive that and invest in the new sort of technology, which is fabulous. Now, another one which seems to be doing really well, which isn't a recent IPO, but has been an absolute winner for you. And I did see you've almost sort of like doubled your position just recently, is EQLS, which is the B2B Forex e-payments platform in the UK that serves sort of large corporates and also, you know, SMEs and small and medium-sized businesses as well. Do you want to take us through that? Because they've had a really good last 18 months. And I think their last set of results, half year, they were sales up 84%.
Yeah, I think this is a very interesting, I would say that, but a very interesting company that didn't enjoy a great time when it was known as Fair FX. And the new team came in and realized they had a good set of relationships with their customers, but so we say the product offering wasn't quite where it should be. So they spent a fair old bit of time just making what should be a very, dare I say, a very dull job, very, very simple and straightforward in terms of managing FX for a small or medium-sized enterprise. They don't do hedging. They don't take any on any
principal risk, do they?
Yeah. They take no principal risk, so there's no sort of margin calls netted off or anything like that. And it's a software play to provide payment services to small companies that trade overseas. And it really is that simple, thanks to the amount of innovation and hard work that they've done in terms of the software and being able to sell it to their customers. And the customers are saying, well, this is brilliant. And actually, because it just works after all the hard work, then we fully expect the good run of success that the company's enjoyed to date to continue. I think companies are sick to death of traditional banking systems. They're inflexible. They can't talk to a human being when something goes wrong with the software. EQLS offers them a flexible, robust system with all the relationships with banks around the world, and just really makes what should be a dull job quick and easy to execute. I have no wish to belittle the fact that it's quick and easy, because it's a sort of a symptom of the incredible hard work that the technology team has done at EQLS to allow that to come to fruition.
Yeah, and I would highlight to investors, I think one of its sort of closest sort of like peers, it isn't a rival, but is Alpha FX, which trades at around about 6 to 7 times sales. And I was just running the numbers, and I think EQLS trades at just between 2 to 2.5 times sales, depending what the share price is. So there's a big value gap there, as in like or pricing gap to close. Yeah. That another area that seems to have done really well for you guys, which is sort of like a theme, is the sort of the video side, and it's the sort of the online streaming. So we've got Videndum, and then we've got THRU Digital as well. And I think Videndum is the old VTech business. I think
that's right. Yeah.
So if we start with that does sort of used to do traditional cameras, but has sort of branched out into online streaming into corporate production of video quality.
Yeah, that's right. After sort of 15 years of extremely hard work, it's an overnight success. Stephen Bird and his team have done a phenomenal job over the last few years to really sort of develop a hardware solution which allows instantaneous transmission of of high quality 4K, I think it is, or he'll tell me off on my next thing because I'll get that wrong, 4K or 5K video, which really came into its own during COVID, and people realized the power and the efficacy of the solution that Vitech offered. And really, they've just been able to say, right, okay, this is a top quality piece of kit. And really, because the rate of innovation is sort of a nice steady drumbeat of new pieces of sort of additions to the hardware and the software, Videndum has really come into its own for broadcast, for filmmakers, and really because of that, sort of people didn't want to be crammed in together one on a set. The technology allowed them to separate, and now everything's back to sort of normality. Actually, people realize that it's actually quite an efficient way of working. We'll keep on going. So with that piece of kit, they enjoy great pricing power. They still do accessories to professionals, and they also have sort of what I would call entry level for video bloggers, but also a range of suite of products, both predominantly in video, but also key to video. We don't want silent films, so they're beginning to sort of move into audio, so high quality microphones that match the quality of their video offering. And really a whole set of accessories to allow people, I don't understand it, but it doesn't matter, I'm making money out of it, for young people to make videos of kicking footballs or cooking cream cakes. Nothing wrong with either of those two, but I just don't understand.
Or even Elon Musk sort of like deciding whether he's going to buy Twitter or not. Exactly.
I don't get it. But if you're making money, if they're making my clients money, that's great. So I'll quite happily to back them.
And what about Zoo and Zoo Digital? Because they do sort of like dubbing and captioning, don't they? Sort of like their localization. So if you've got a big blockbuster on Netflix or something like that, and you want to take it out to Asia, to Cambodia, India, these kind of, they convert it into sort of local languages with local professionals, freelancers who put the voiceovers, I think. Yeah, and what you've got it in one, but what they also do is that I don't know when you were a child. You know, only yesterday, a bit longer ago for me, but sometimes you'd see watch the kiddies programs that were dubbed. So Hansel and Gretel would have not subtitles, but we dubbed in English. Yeah. So the shape of the mouth would be talking German or French, fine. But of course, the shape of the mouth is nothing what doesn't reflect in any way the shape of the words that you know that an English person is. So what they've figured out is also a way sometimes to actually change the shape of the mouth in time with the dubbing. So if you, for example, let's say David Beckham, he doesn't advertise anything in the UK, but good on him, he's made a fortune advertising luxury items in Japan. Now, you might have an opinion of what he was like as a footballer, but David Beckham speaking Japanese, I'm a bit doubtful about that. But really? What the technology of Zoo Digital allows is that he speaks a sentence, say, buy this scarf for your loved one, and they will not only dub it in Japanese, they will actually change the shape of his mouth so it looks like he's truly speaking Japanese. Wow. Okay. Well, anyway, the business is absolutely flying, isn't it? Yes. Because I think they've really sort of like, you know, during the lockdown, it was difficult to make films and stuff like that, the big broadcasters. But now, given the streaming wars, it's really sort of kicked on, hasn't it? Yeah, well, it's that step up in quality of dubbing in terms of that sort of, actually, it's a far higher quality offering that they can give. And as you're quite right, content has exploded on the new platforms that you listed. So both in terms of content, but also quality. People are looking at dubbing and no longer saying, well, it's the poor man's subtitling. Actually, you know, why even bother with subtitling if you can make it that good? Yeah. Well, you say you've done really well with those four. Just moving gears to a different industry that you've bought recently is international personal finance, which I think is a sort of like a home credit play in sort of the old traditional Provident financial business that used to do doorstop lending but it does it out in Eastern Europe into sort of the Baltics and also into Mexico. Now, two questions I would have is, I know you've bought it at a terrific value. It's sort of half its net asset value at the moment. It's a huge sort of discount in terms of two questions. How do you distinguish between a value play and a value trap? And likewise, how resilient is this business to a down cycle if we go through a hard economic, sort of like outcome?
I think with spotting a value trap, it's always easy. It's easy when you're in it because the share price doesn't move no matter what they do.
Yeah,
this is a sort of a problem that with international personal finance has got an exceptionally good, we think, good business model, but too many times in the countries in which it operates, it doesn't do anything illegal. It doesn't have men with a dog on a rope going around asking for money. And it operates within the law, but very often, because they're the largest operator of sort of not payday loans, but sort of short-term lending equivalent of, say, if they were in the UK, they'd be offering sort of 200, 300 quid, and that's meaningful, a person for whom that is meaningful. And very often what's happened is the politicians are saying, well, you're exploiting my constituents. I'm going to put you through the ringer of regulation and Parliament. So I'm not going to let you do business. And so international personal finance says, well, it's either us who sometimes we wear suits or we just wear smart casual, or it's a nasty man in a leather jacket. Which one do you want? Because there is a need for this. Not everyone can get through a month sometimes. There is a real need. And also, we want to be able to price our product in a way which reflects the risk that we're taking in lending to this individual. And all too often, the politicians, I think politicians are the same elsewhere as they are in the UK, rather than looking at the facts, they far rather prefer a headline.
Yeah.
And over the past few years, international personal finance has suffered from that. And really, I think in terms of they say that they get impairments of sort of, it depends where they go, but anything between, say, 7% and 20%. And they feel quite comfortable with 20% because they say if it's in some countries, if it's less than 10, we're not lending enough, or we're not taking on enough risk. So I think it's actually a very strong business. Sometimes there are different geographical, some countries where they operate, for example, in Finland, I think, there's actually very concentrated areas of population, so it's quite easy to run a network of lenders. In Mexico, people are quite dispersed, apparently. So that geographical dispersion not so much leads to control, but can lead to sort of quite a lot of cost to try and get the same sort of lending. And ever since the political shenanigans came in the various states, the share price has suffered. So whilst the share price, is sitting around about 80p, I think, and the net tangible assets, thank you for your crib sheet, is around about 160p.
Yeah.
What will close that gap? I don't know. I think there's either for them to start a share buyback, or for them to actually say, this is the strategy this is the strategy in each of the regions, and we're free from political tampering. But I think, sort of such as the level of risk aversion in the market that we see on a daily basis, people aren't prepared to look past next week, let alone what might be going on in 12 months' time when things settle.
So and then sort of turning a bit close to home in sort of like an area that's really quite solid, infrastructure and construction. You've got a couple of sort of like really solid businesses. You've got Renew Holdings and VP, and I think Renew Holdings do all things sort of like essential sort of services, particularly in its nuclear specialism and in engineering and stuff. And there's been rock solid really for the last sort of 18 months, 2 years. And likewise.
It's just a class engineering, civil engineering company. Doesn't take risk on big jobs. Lots of diversification, and it's not sort of, when you say civil engineering, people roll their eyes. It's not sort of building, public conveniences up and down the sort of the A roads of Great Britain. This is true value added work, either in, for example, nuclear, where, funnily enough, standards are rather high in terms of letting people, even hang up a picture in an office, let alone muck around with the fabric of the buildings. But also they do a lot of work on the railways. And before I came across Renew, I hadn't appreciated that every single person that goes, as soon as you put your foot on the ballast, before you can put your foot on the ballast, rather, you have to pass a whole sort of set of series of conditions that you, in terms of health and safety. And then there's a bit like a pilot with his flying hours. You can only then go through the different grades: bronze, silver, gold, platinum. They're not called that, but it might as well be that. Whereas you can say, if you want to operate a crane on a track that can access the pantograph supports, then you need to be a platinum badge holder, and you need to have, say, I don't know what the number is, but say 200 hours of fault-free work on the railway network. So what that means is, it's predominantly men that do the manual work on the railway. What it means is the blokes get really well paid, but it's antisocial, but they don't mind that. They like the money because of this bronze, silver, gold. And it means that what Renew does, certainly in the railways, allows them to fix the bridges, fix the tunnels, do the electrification work, which is very dangerous if it goes wrong. So Renew can charge a good commercial, healthy rate. And
mission critical, isn't it? It's mission critical.
Yeah, thank you for the phrase. Yeah, they use that themselves. And that has allowed them, certainly, I think, it wasn't sort of hiding its light under a bushel during COVID, but people didn't really know. Everyone just said, "Oh, it's that civils contractor, isn't it?" Which sort of hid the quality of the business, which is great because it allowed me to build up a good stake.
Yeah, well, it's got a rock solid balance sheet as well. It's got basically zero debt, so it's
sort of a recurring theme of the companies we've spoken about so far, with perhaps the exception of IPF. Net cash on the balance sheet. I mean, some of my colleagues pull my leg and say, "Ian, you need your comfort blanket." But that's when you can just, it's tried and tested, and it's a good solid winner, isn't it, over long term? Yeah. So, but in terms like this, I'm the one going into work quite happy, and I sort of sleep at night. I sort of
I've managed to do that. But on the other one in the sector, which is it's VP, which does effectively specialist equipment rental to really the infrastructure of construction industry, and also the sort of house building. I think it's got sort of like brands like Ground Force and UK Forks, and likewise with Hire Station, etc. But I know they do supports for the likes of HS2, ground supports, and they're helping build, I think, Hinkley Point. So there's plenty of construction work out there. Yeah, and they've been sold off, bit of the baby in the bathwater recently. I think the shares are around about about £7.50 or something like that.
But again, it's a class act, very, very sensible but astute Yorkshireman and Yorkshire.
Yeah, it's Iain Staples, isn't it, the CEO, and Alison Bainbridge, and I think, is it Jeremy Pilkington he's the chairman, isn't he, or something?
No nonsense Yorkshireman, clear thinking, straight talking, but to be that straight talking, you have to be very good. He and his team are very good.
And I would highlight to investors, I mean, I think they're trading at around 10 times PE. So for a specialist equipment hire rental, and with downside resilience, because I know if they go through a really hard patch, the UK economy, these equipment rentals haven't got to basically renew their fleet, and they can just, they make high operational margins, don't they? So
That's right.
You do get that. Now, shifting gears on the engineering front, into sort of like really high growth areas, which I think really be worth it in investors sort of like having a look for. Let's start with Saietta, which does really quite specialist axial flux electric motors. That's where they started, and they've sort of branched out into drive systems for now because of acquisitions from buses, trucks. We've got down to tuk-tuks and three-wheelers, and also outboard motors and supercharged cars. So I think they've got the whole variety there. Do you want to take us through this one? Because
I mean, this is perhaps one of the, shall we say, longer duration stocks that you suggest we cover. So the share prices have taken, since its float, been not the most enjoyable, but certainly what attracted me to this was both the resilience of the engineering and proven resilience, but also the fact that here was a CEO that had been through it before and has assembled a team that's been through it before, and basically been left, I think, a couple of times eating dust, regardless of the quality of the engineering. And they wanted to turn it into something commercial. So, excuse me, they were very, very entrepreneurial in terms of getting hold of the manufacturing site in Sunderland, the recent acquisitions that took them into complete drives rather than just a very clever motor. And the fact that really they were thinking, how can we sort of differentiate ourselves where we can maintain value? Some of the value we've created will come to us rather than going predominantly to the automotive OEMs. So whilst the story, as you've pointed out, has evolved, but evolved in a good way, originally these motors that they developed were going to sit on motorbikes because, of course, in Southeast Asia, a huge amount of population, the most popular way of getting around is on a motorbike, or indeed a putt-putt. So, but they produce huge amounts of pollution. So if you take away the diesel engines or the petrol engines that power the putt-putts and the mopeds or the motorbike.
Tuk-tuks, I think they're called.
Yeah, tuk-tuks, that's it, thanks, yeah.
Yeah.
I've been in one, they're great fun, but it's sort of...
They're frightening in Delhi, I can promise you.
Frightening, yeah. That's what attracted me. And the fact that the motor is both very powerful and very efficient. So it can do anything from a motorbike and, of course, with appropriate gearing, put in a car. But they didn't want a car because the OEMs suck all the value out. Now that they've got the complete drive solution rather than just the source of the motion, source of the power, source of the motion, I think that's a compelling message because basically you've got now a system that can sit on a chassis, regardless whether it's a car, light van, light lorry, heavy lorry. And then there you go, manufacturer, plug in, we can move bits around, you're paying, we'll do anything, but we can do it. And I think now they're in a very, very powerful position to really start to create some proper value.
And they signed that massive sort of flagship deal with the US's largest truck and trailer OEM, Conmet, didn't they, just recently, which is a huge, I presume, statement or endorsement of their science to go with such a large OEM in large scale vehicles with trucks and trailers.
Yeah, well, this goes to the point about sort of the excellence that the company has at its core. They're actually based their sort of innovation lab. That's a bit of a grand term. Was actually an old RAF airfield in the middle of Oxfordshire, and their offices were sort of where the officers' mess was, and across the runway was where the nuclear bombers were kept during the Cold War. So it's a bit of an interesting place. You half expect Steve to pop out with his hard hat and brolly.
I think they're sort of like helping the UK sort of electrify the sort of like the traffic world anyway. But we'll wait and see. A couple of areas, software, really software as a service. So we've got a couple of sort of like category killers here, I noticed. First of all, let's go for activeops, which was an IPO that did really well at the start and has obviously fallen back. It's headed up by a guy called Richard Jeffrey. And I think what it does is basically sort of automation systems that help the back office manage in large financial institutions like banks and insurance companies, like things like know your customer and anti-laundering. So it's this sort of software that helps people improve their productivity, which is something which is obviously going to be a massive need for companies going forward, I would have thought. Yeah,
there's the way to think about it is that sort of repetitive clerical tasks were often carried out. Just used to go into going to a clearing bank or regional office of a clearing bank of a NatWest or a Co-op or a Barclays or whatever, and they just have 2 floors of people doing the checks. Incredibly repetitive work. Really, to say it was dull would be harsh on the people working there, but blinking Nora, there was no variety in work. Well, the worst thing is we're human. Well, because we're human, we're not very good at repetitive stuff, and we do make mistakes. Now, the thing is, when you've got something repetitive but important, and if you can automate it, then that's brilliant. Those people who are clerks and go off and do something else, perhaps more value added, more fulfilling, and no mistakes are made. Computers can work 24 hours a day. Human beings sort of kick up a fuss if you work more than 12. And so, therefore, what activeops does is allow all those repetitive number crunching tasks, processing tasks, as you say, within a bank or within an insurance firm, to be automated. And sometimes some organizations have so many of these sort of robots, they have other robots watching the robots. So the fact that activeops has got this wonderful offering allowing people to organize work and manage capacity, but very often what happens is that a company will say, well, I'll let you do the checks in the branch office in Manchester. And then, hey presto, 3 months later, there's been no regulatory breaches. The IT boys are happy because there's no bugs. There's been no breaches. Audit are happy because there's been no leak of information. And then they say, well, okay, let's do it all over the UK. And then some companies say, right, okay, let's do it all over the world. And I think the offering of activeops in terms of the flexibility of the software means that given the complexity, and then they really, they're beginning to apply, well, okay, here's a business problem in terms of, say, let's try and tidy up insurance claims processing. Well, lots of people write funny things on insurance claims processing. You have to think about Jasper Carrot and all his jokes. But what they're beginning to think about is, let's develop a true fuzzy AI engine that allows us to categorize the insurance claims. Let's then put it through the standard automated network that we've got, and then obviously let's trial it for 3 months. We don't want people being sort of not getting the money that if they've half the car's disappeared. But on a serious point, people are actually beginning to combine really robotic routines with fuzzy routines, and activeops are leading the way and actually making companies far more efficient. Now, they've been caught, like many, with the market sell-off, but it's one of those leaders in its field that is almost very British. It's a bit like Q and Diamonds Are Forever, the voice cover. Made one of these for kids for Christmas. activeops is truly one of the world's best in its field. So we're hanging on.
Yeah, no, and I think it's highlight to investors. I think they've got sort of 80% plus gross margin, so the unit economics really works. They get the scale. They've got sort of like mid-teens like-for-like growth rates in on the sales line, and they were profitable, I understand, before they IPO, which is pre-pandemic. They're only unprofitable at them, have been the last 2 years because they're investing so much.
Sure.
So they know how to, what gears to pull if they need to get back to profitability and cash flow generation.
Yeah, we told them. He came to us, and I'm sure he went to other shareholders as well and said, "What do you want us to do?" And we said, "Well, just innovate and invest like crazy."
Another one almost exactly in the same boat is ESYS as well, which does essentially is a category killer in flexible office software and digitization. So I think the base investment case hinges around, because obviously we've gone through the pandemic, lots of big offices around the world now, which are on long-term lets. They've got excess space. They'll then turn part or some of it into flexible letting and short-term lets as employers want that. And this is their real sweet spot, as I understand.
Yeah, I mean, basically, it's run by an entrepreneur that has been doing software for office space for 20 years. And really, he saw the pandemic, as you quite rightly pointed out, as being an enduring change in people's behaviour and what they're prepared to tolerate. No one wants to do the 5-day commute anymore. So hybrid working is now a fact of life. And therefore, landlords in office buildings are looking away to far more efficiently manage their space so they can actually get a bigger bang for the buck. But of course, within a modern office building, there are about 20 or 25 separate IT systems that all need to be run and managed for the benefit of the tenant. Now, if that tenant is doing and they've negotiated working from home, or he has decided he wants his people to have a hybrid model, think of the air conditioning, think of the lighting, think of the Wi-Fi usage, think of the water, think of the use of sort of basic facilities. You want water, hot water. So all these things need to be measured. Now, that's a non-trivial task. If you're on a 50-story building in New York City with 100 tenants all doing different things, that takes a lot of monitoring and developing. And you can't do it in a spreadsheet. You certainly can't do it on the back of a cigarette packet or an envelope, like might be the case once upon a time. So what he's done is develop very successfully a piece of software that allows a landlord to measure and all these different systems, bring it together, and then in one place be able to charge each tenant the appropriate agreed rate according to all those different factors that I described just described. So what they found that was great. The landlords loved it, but when people were coming out of COVID, there was suddenly a lot of hesitancy on the landlord saying, we don't know what people want, and I'm not going to buy anything because I've got no money coming in. So Mark, the CEO, said, well, I've just raised a load of money. I'm not going to go bust. I've got about £30 million on my balance sheet or something. I'm not going to press the button like I said it was, because I think it's going to be another 12 months before the demand comes, but nothing to worry about. It's going to be even better. Funnily enough, because there was a 12 months delay for what I thought was a very sound commercial reason, I thought that was a sensible business decision, but of course the market didn't like it and the share price got clattered. At this level, and of course I do own the shares, we do own the shares, I think it offers a wonderful play on the changing shape of the office market over the next 3 to 5 years, and ESYS is going to be a winner.
Yeah, no, I would agree. I mean, they seem to have perfect positioning, and I think like activeops, they were profitable before they IPO'd, so they know what levers to pull to do that. They're just investing in their growth, aren't they, at the moment? Yeah. Particularly out in the US. Now, one small cap stock that was spun out of Open Orphan, which was sort of like did well in the pandemic and does challenge vaccine trials, etc. It's the company which talked about is Poolbeg Pharma. That are kind of a couple of really quite lead sort of drugs in infectious diseases, and I think the lead one is an antiviral, largely for serious influenza, but can also treat sort of like the COVID storm, which is that really bad immune sort of like condition if you go down with it, etc. Now, I know there are early stages. You want to take us through this one, because it's quite difficult as an investor to see, sort of like the scale of the opportunity and how to price this and valuation, because the shares have come down, but I noticed the CEO buying a shed load this morning.
Yes. Yeah. I mean, I think I call it hidden value there. Yeah. I think that the development in terms of that, the experience, the knowledge they've got, because of course as you say, they came out from Open Orphan, soon to be renamed HVivo. Yeah, I think the fact they got 20 years of data of human challenge trials from that very relationship means that they will be able to, in the face of any future pandemics, God forbid, or any sort of outbreak, people are far more interested now in understanding what kind of how to get through the various clinical stages of an approval for treatment, And rather than being sort of a suck it and see, because of the data that Poolbeg enjoys with its relationship with hVivo, it's in an ideal position to actually sort of streamline that approval process and actually speed it up markedly. And of course, every month where it takes to approve a vaccine is not only very important for the obvious human angle, but of course there's a pecuniary aspect to people getting through.
They're not. I don't think they're vaccines. They're antivirals, aren't they?
Antivirals.
Yes. So basically, once you've got the disease, I mean that's the big gap, isn't it? Is essentially, around the world we have vaccines, but frankly, if you've got it and the vaccine doesn't work, which is a lot of people, if they've got a compromised immune systems, then they need an antiviral to get them through severe. Well, let's be clear about it. Severe influenza kills millions of people each year around the world, doesn't it? So, we keep forgetting about that, but actually it's right up there with cancer and kidney disease and stuff. Another one which is sort of like been through the ringer that has had a lot of director purchasing just in the last couple of weeks or last week is Musicmagpie, which does it takes old sort of like mobile phones, electrical consumer gadgets, and refurbishes them and rather resells them or actually rents them out, doesn't it? And do you want to take us next? The shares have come off, but clearly the directors, they bought over £400,000 worth of shares in the last week.
Yeah, this sort of speaks to the sort of the circular economy. So in terms of putting in your old phone or books or CDs into the kiosk or sending them off, getting a fair price for them, and then you'll go off and buy. What they found was coming out of the pandemic, people were rather more cautious about wanting to buy, so they haven't been able to hit their numbers, quite frankly. So they've been absolutely clattered, and as we come out of the pandemic, what they're actually trying to do is to say, well, given the uncertain consumer environment, and it's going to remain that way for some time, many swathes of the population, even though they're addicted to the mobile phone, aren't going to get to spend £400, £500 even on a reconditioned one. I don't know what a new one costs, about 1,200 quid or something, is it?
A new iPhone's £1,000.
Is it? Okay, thank you. So what they found is that, we are going to have to do two things: make sure we can ensure a consistent supply of stuff, for want of a better phrase. So we'll have kiosks which can securely drop off, where you can securely drop off your iPad or iPhone or Galaxy or whatever, and make sure that it goes to Mr. Hill's home address and you get an appropriate payment in your bank account within 48 hours of depositing in the kiosk in Waitrose. So, and then what they're trying to say is, well, okay, if people don't want to buy, then let's do the rental stream, and then they're going to start marketing that over the next 6 to 12 months. That's going to take time, or to build up that stream. The only people that are in sort of the rental part of the business have been there by accident. I think as we see the company go on a far more aggressive marketing strategy to develop that rental arm, then you have a business that is far stronger because it's rent, so £20 a month or whatever. So it's the old radio rentals. I don't know if you're of a vintage to remember that.
Yeah, I remember we used to rent our own TV when I was a lad.
Yeah, same here.
Cathode Ray.
Yeah, my dad rented the telly too. So we're going back to that. And I think that's a far better place for the company. Yeah. They're currently got, I think the net debt to EBITDA is around about 1.6.
Yeah, so that's again,
right. I think people, understandably, in an uncertain consumer environment, the covenant is 3.0 times, but people get jumpy when you've missed numbers a couple of times. So I think if people are looking at that, I think it's a great business. It's got great ESG credentials. Business models not being as resilient as we might have hoped, and certainly COVID has really put it through the ringer. But I think now, I think the confidence shown by the directors is a reflection of their confidence in developing the rental stream.
Yeah, just moving down, one stock you got in there, which seems to be absolutely rock solid, is FinteL, which I think is the UK's sort of largest data stroke software provider for sort of IFAs, but also for increasingly product providers, the big, sort of like Avivas of this world, to distribute their products to, to consumers. And so it sort of sits in the middle between all of those, between the product providers, the IFAs and the consumers, supplying them the relevant data, regulatory advice and all that kind of stuff. And it seems to have huge economies of scale.
Yeah, I mean, you've done my job for me on that one.
Well, I'll get the key question.
What else can I say?
The key question I think really comes down to the business model is how do you accelerate that growth? Because that will be, because they've got such great attractive margins. If you can, and they've got superb drop through rates. It's accelerating that business model.
Yeah, I think it's taking it into new areas. I think also the fact that a lot of people, as part of their buying process, I mean, the consumer is, of course, the end. They want a proper ESG audit rather than just the marketing department saying, "Yeah, we like cuddly animals. Here's a picture of my pet cat."
You sound a skeptic.
Yeah, well, no. I'm sure all the companies that got a 5-star.
No, exactly. Yeah,
FinteL have been put through the ringer.
Yeah.
But I think people want grown-up ESG. They don't want pictures of cuddly pictures of pet cats. And I think that is a very sizable opportunity to FinteL to take the top flight reputation it has already in existence in financial intermediaries for ranking of products, current accounts, mortgages, car insurance, what you will, and take it into the ESG domain. So when people do increasingly purchase with that an important factor, they know they're not getting their chain pulled.
Good. Okay. Well, I mean, it does seem to be a totally rock solid. I mean, if investors want a bit like big technologies, it's got a large sort of like moat around it. It's got very good margins, and it's growing its core business really strongly. It's sort of high single digits, and if you can continue with that, then you're just going to see it all drop through to the bottom line, I guess.
Yeah, I mean, it's that sort of set of relationships with it's one of the more tedious jobs of the admin year, isn't it? Doing your car insurance or house insurance, but it's something you can't put off. Car insurance is illegal. Home insurance, you're just stupid. Okay, you might have pet insurance or other insurances. That's up to you.
I think it's more mortgage, isn't it? It's mortgages and financial products, I think, is the key. Now, just moving on to another one actually on the video I forgot to mention, which seems to be Florida the Plum flying. It's Blackbird. They seem to have really sort of like just won some landmark deals licensing out in the States.
Yeah, I mean, they do sort of they've got a unique video codec which allows very powerful and quick editing of software of typically sports content. So they got a big contract with a North American sports broadcaster, and now moving into the big boys with people like Microsoft, and also sort of in talks with Amazon. So this is a unique piece of software written in sunny Wimbledon.
Is it?
Yeah, that's where the head office.
That's where the tennis came from. Then
they
got the sport. Yeah.
So now that's where the founder wrote his code a few years ago. So that's where the office is. So they're beginning to go places. I think what's very attractive about Blackbird is when they do a deal, they ask for cash up front. So they as they grow, they will generate cash rather than sort of being strung out forever like some large companies would do if it was just a small company in Wimbledon. So beginning to see real traction, and by traction I mean cash in the bank or checks incoming, and also the excellence of the video offering, proven by the likes of Microsoft saying, we'll have a bit of that.
We've got one also called Thruvision, which I think basically does sort of scanning people for the typical sort of border control, so for sort of contraband and also for sort of weapons and explosives. But now seems to be increasingly used in the retail area to stop pilferage. It's sort of like stopping people nicking bottles of scotch, I guess.
Yeah, no, that's it. I mean, our bodies at about 37 degrees C emit radiation. I don't mean the radiation that makes your hair fall out. It's particular wavelength of radiation in the infrared part of the spectrum. And what Thruvision have done is got a unique piece of engineering that can monitor or detect and build up a picture of our bodies using this particular wavelength of light. Now, it's very different from visible light. So it is, I've stood in front of it, all you see is a human body that if you lay down on the ground and you draw an outline, that's what you get. And you're because you were typically slightly warmer than the background, there's just this grey image of a human being. That's all you see. Now, what they then did was that the police had been in their offices in Abingdon, and the police had brought along a Kalashnikov rifle, and they'd taken the police had taken the firing pin out.
Right, I'm glad to hear it.
Yeah, so we're glad to hear it. So the police were quite happy just mucking around with this Kalashnikov rifle.
Yeah, exactly.
And they put it on the sort of their body, and then put a coat over it. And then they said, right, come on then, let's see what the picture's like. And the Thruvision camera, there was sort of 4 channels, 4 detectors into one unit. And it was amazing. You saw the shape of this 6'4" Bobby, a great big hulking bloke. And then there was the shape of the Kalashnikov on his chest.
Wow.
So the same concept as you say with pilfering. So if you work up in Sports Direct or wherever up in, say, Derbyshire, and you stuff 4 pairs of jeans down your front, that will scan you, and then there'll be an image.
Alarms
of you
going off.
Yeah.
No, I mean, it seems like a massive market that the sector really does need, because I know from the coal face, when, just as a data point for investors, when Amazon bought Whole Foods a few years ago, it decided to convert some of its retail stores to total automated sort of checkouts or even non-checkouts. And the reason why they had to shut them was because of high pilferage. Now, you get one of these systems it's going to bring that down, and means that actually you don't need checkout staff, basically, and you've got everything that, everything that works. So I would just in anecdotally, I would have thought it'd be a home run, that one.
Yeah, I mean, also, it's a sad fact of modern day life, isn't it, that there's some very disappointed young men that like blowing themselves up. They insist on using mass transport systems. What Thruvision are pushing,
good point.
That you can passively look at everybody. Getting off a train, for example, I come into Waterloo each morning. What they could do is just put a camera up, or 3 or 4 cameras. We live in a surveillance society. What difference? What more cameras going to make? And put in these infrared cameras of Thruvision, and of course, sort of the police aren't interested whether you've got 3 mobile phones or 4, unless you've nicked them. But if you've got some rather strange things going on the top half of your body that shouldn't be there, then someone needs to have a word, don't they?
Yeah, no, absolutely. And, it seems to have huge addressable markets. Now, just finally then, let's just do one for the oil and gas potential investors, which is the picks and shovels play, is Ashtead Technologies, which again, I think sort of IPO'd not long ago, but it does submersibles largely it came out of the oil and gas industry in the North Sea, but actually now is getting increasing work in offshore wind, isn't it, I think? And it seems they've come out with some really strong results. And as I say, it's been one of the few IPO successes, I think.
Yes, it's the very, very, very few. They as you pointed out, they IPO'd in the teeth of a vicious market. But I think it's testament to the strength of their commercial relationships that they have with their existing customers, as well as moving into, as you quite rightly say, into offshore wind on Dogger Bank for UK wind. That here is a British success story in the sort of the new markets of transitional energy as well as oil and gas. They do, of course, do work in oil and gas, so a lot of maintenance work underneath the waves, doing essential work that would scare most of us to death, and myself included. But they're very, very good at it. It's very conservatively run, very good management team, and I really like the commercial controls. Every time I sit down with that team, I'm always impressed by both the thoroughness of sort of their contracts. You can really push them. You certainly don't, I'm not saying I get commercial terms or anything, but just how they've constructed the contracts with these oil majors and the wind people, just to ensure that, okay, Ashtead Technology is going to earn a decent return for the risk they're taking on. Yeah,
I mean, they make 25% EBIT margin, so they're obviously doing something pretty unique and pretty good there. Fabulous.
Yeah. I mean,
absolutely.
Sorry to interrupt.
No, absolutely. Is there anything else you want to add on, Ashtead, before I? No. Okay. Well,
no,
I mean,
there was. Yeah, there's a program I'm plugging, State of Happiness. I think it's on Netflix or something. Started the Norwegian oil industry during the 1960s. They do the exact opposite of that. Things have moved on. It's quite
frankly good.
Okay. Sorry. Go on.
No, that's all right. Well, anyway, thanks very much, Iain. Absolutely fascinating running through all the stocks and your view on the actual markets. I mean, there's brilliant combination there of sort of like GARP stocks, value plays, and sort of like, industry domain winners, and some good, reliable sort of like, sort of industry champions that are just knocking the ball out of the park, whatever the weather. So real good selection for investors to run the roll off. And if anybody wants to invest in the sort of, the Schroders fund that you look after, how best to do that, Iain? Is it contact you or? Well,
it's to contact your IFA.
Yeah, okay.
Or indeed, there's I'm probably not the best person to contact because of regulatory reasons.
Yeah.
But if there is Schroders, of course, has a website designed for retail investors, or of course through AJ Bell, Integrafin, or Hargreaves Lansdown, you can access. For retail investors, I sit on two funds. There's the Schroder UK Dynamic Smaller Companies Fund and the Schroder UK Smaller Companies Fund, which I run with my colleague, Andy Bruff.
Brilliant. Okay. Well, thanks again, Iain, and look forward in touching base, hopefully in about next 6 months.
Okay. Thank you very much for the opportunity to talk. Thank you.